America's June jobs report just cratered to 57,000. And for the first time, AI got named as the culprit. Plus 4 more stories moving the AI tape today. Let's get into it. The June payrolls print landed this morning at just 57,000 jobs versus 185,000 expected, the weakest month since the 2024 slowdown. Yet unemployment actually ticked down to 4%. What makes this print different? For the first time this cycle, AI displacement is being named in the mainstream read of the data. Tech sector layoffs have hit 142,000 year-to-date, with roughly 88,000 U.S. cuts directly pinned on AI. That cuts 2 ways for investors. It validates the automation thesis, propping up software and AI multiples, machines doing the work. And a softening labor market eases the hawkish Fed hike odds under Chair Warsh that battered the AI trade all week. The bear case. Weak hiring may signal broad demand softness, not just efficiency gains, a growth scare, not a productivity miracle. The forward signal. With markets shut for the holiday, Monday's reopen is the first real tell on whether this reads as bullish disinflation or something darker. Here's the competitive shift reshaping the private AI valuation debate. Anthropic now says it's tracking to $47 billion in revenue with profitability by 2029, a full year ahead of OpenAI, which projects $25 to $33 billion annualized. And as of May, Anthropic has passed OpenAI in business subscriptions. Deutsche Bank notes, ChatGPT's monthly visits fell below half the Gen AI market for the first time. Consumers are going multi-model. Sam Altman's answer isn't just product. He floated a US-led international AI governance forum, modeled on the IAEA. The bear case. These are revenue targets years out, and profitability by 2029 is a projection, not a print. The forward signal. Both firms IPO in 2026, and the default leader premium OpenAI has carried is now contestable. Watch business seat share. If Anthropic keeps taking the enterprise, OpenAI's valuation multiple compresses at exactly the wrong moment. The White House is in advanced talks with the major labs to finalize a voluntary framework for frontier model releases, with an announcement possible as soon as the week of July 7th. It builds on the June 2nd executive order. Pre-clearance is explicitly prohibited, but the government gets an opt-in window of up to 30 days of pre-release access to covered models, plus classified cyber capability benchmarking. The coordinating labs are Google, Anthropic, and OpenAI, and that's the investor angle. This sets the cadence and compliance overhead of every future top-tier release, a direct input to time to market and the revenue ramp of the frontier product lines. The bear case. Voluntary today has a way of becoming mandatory tomorrow, and every added review day pushes revenue to the right. The forward signal. Watch the week of July 10th for the announcement and the August 1st design deadline for how heavy this process actually lands. Anthropic's export saga closed a genuinely new chapter. FABLE 5 returned worldwide on July 1st after the Commerce Department lifted its June 12th export controls, and Claude Sonnet 5 became the default for all free and pro users the same day. The operational hooks are what matter here. A new safety classifier claims to block jailbreaks with over 99% accuracy. That was the exact vulnerability that triggered the freeze. And July 7th marks a billing cliff, when usage credits give way to paid consumption. Restored frontier availability plus a paying usage transition is a near-term revenue tailwind straight into Anthropic's IPO narrative, the same IPO race we just covered against OpenAI. The bear case. Export controls that lifted once can snap back, and a billing cliff always risks churn as free users hit the paywall. The forward signal. Watch July 7th conversion. Strong paid uptake hardens the revenue story. Anthropic will sell to IPO investors. Jensen Huang signaled NVIDIA's recent stakes in OpenAI and Anthropic are likely its last before both go public in 2026. The finalized participation in OpenAI's $110 billion round came in at $30 billion, with associated infrastructure plans revised down to 5 gigawatts. This cuts two ways. It locks NVIDIA into the demand side of its own largest customers, exactly the circular financing critique the bears keep pressing. NVIDIA funds the labs that turn around and buy NVIDIA chips. And it caps further exposure right as IPO price discovery looms. That critique isn't academic this week. It helped trigger Thursday's brutal chip reversal, with Micron down 13% and roughly $138 billion in market value erased. The bear case is the circularity itself. Real demand or an accounting loop? The forward signal. With markets shut today, Monday's semiconductor reopen tells you whether investors are pricing genuine AI capex or the start of an unwind. The through line today: everything is repricing frontier AI ahead of the 2026 IPO wave. A jobs report naming AI out loud. Anthropic contesting OpenAI's crown. Washington setting the rules. And NVIDIA's circular bets under the microscope. Monday's reopen is the next tell. If this was useful, subscribe for tomorrow's tape. This has been the Daily Alpha.